All right. Today we're going to be issuing our very first ETF report from the week of May 24th, 2021. Now, I know ETFs may seem like they are a bit of a drag in terms of the conversation, but they do have a lot more uses than what we traditionally use them for on the market. And we're going to talk about some of those things here today. All right. A few areas that we're going to focus on are: what is an ETF? What are the benefits? How are ETFs created? Who are the top issuers? Weekly inflows and outflows, as well as other ETF reports. All right. Now, let's start with a simplified definition. Exchange traded funds are simply mutual funds that can be traded on the stock market. Right? They hold a group of stocks that are collected during the ETF creation process and put together into a basket that you now own. All right. Here are some of the benefits. Right. Number one, you get hundreds of companies and investments that have been researched by professionals and gives you the ability to invest knowing that there has been time and effort put into building a portfolio for you. All right. The key thing, though, is to understand that you can and should research the investment objective as well as the holdings. All right. Now, the second benefit here is that you get to take on less risk and still see the growth and income from the movement of the market. Essentially, you could also build your own retirement account this way, as well as many professionally managed accounts use mutual funds to bring in returns. All right. And number three, you can build a portfolio that competes with the market in terms of total returns. This is one of the most important things to focus on in terms of the stock market. Some index funds and equity funds are consistent outperformers and can save you tons of time. All right. If you want to look for the total returns of an ETF, you can go to seekingalpha.com. All right. You can type in the ticker symbol for your ETF and go to the momentum tab, in which they will not only give you the total returns, but they will grade those returns over time. Moving on, how ETFs are created. Okay. Creation and redemption is the process associated with the buying and selling of ETFs. Right. It involves multiple parties and the buyer of the ETF. Now, let's say you were the buyer. You wanted to buy a share of an ETF. You go onto your trading app, you pay for an ETF, sending the cash over to our participant or our market maker who sends that cash over to the exchange like the NYSE, right? And they get those stocks back in return that they're going to deliver to the ETF provider, right? Now that ETF provider is then going to send an issue of their ETF or a share of their ETF back through the market maker to you. Now, when you purchase a share of an ETF, it may not seem like all of this is going on, but this is what's happening in the background. All right, moving on, let's talk ETF fund flows. This is a super important part of the market that a lot of people neglect, right? ETF fund flows can give you some indication of market sentiment, how things are going to work out. In this particular case, we're looking at ETF fund inflows, right? This is money coming in, or the creation process that we just spoke about. Now, this week, we saw the total market underperform the index funds, okay? The total market being the VTI, right? Which underperformed the QQQ and the SPY, which is the NASDAQ and the S&P 500, okay? Now, a clear shift toward quality fundamental plays and a shift towards short-term bonds and high-yield bonds also happened. The shift to quality shows that that investors are seeking out safer, stable investments. The shift to high yield bonds and short-term bonds shows that there's expected increase in interest rates, and we've already seen some of that last week. All right. Now, BSV and JNK represent our bond market. QAL represents our MSCI, which is an index that tracks companies that have high ROE, low debt, and low earnings variability, right? So this tells us that people are looking for quality right now. It's not that they're avoiding the total market, but they don't want to take on all of that risk. They want to bet on some of our traditional giants in the game, right? Next up, let's talk about fund outflows, because this also helps us to understand the market as well, right? Now, fund outflows are what we call ETF redemptions. It would be our creation process in reverse. When you want to sell that ETF, you send that back out to the market makers. It's then broken into those different shares of the companies that you purchased and sent back out to the market. Now, in terms of outflows, real estate, semiconductors, finance took a hit. Healthcare, long-term treasury bonds, and high beta took a hit as well. Right now, each of these ETFs saw over $300 million in outflows, with finance seeing the greatest outflow here with just under $600 million headed out. Healthcare and semiconductors also saw a pretty decent hit as well. TLT is our treasury bond ETF, and this definitely took a pretty decent hit, almost got hit as hard as healthcare here. Now, this is definitely supporting the thought that there may be interest rate fears and a bit of market correction. Finance, semiconductors, and real estate have been coasting and were due for a pullback. Long-term bonds are simply worst when it comes down to rising interest periods. All right, let's keep on going. What's also important to note is who are the top ETF issuers. All right, here we have our top 15 ETF issuers for the previous month. And as we can see, ARK ETF, oh my goodness, they are just in the tank yet again. The only ETF issuer to see record outflows in May, as all other ETF issuers continue to work their way to the upside in this record year for ETFs. I don't think there's a reason why any ETF manager should be down, but what can I say? I think it's time to pull the plug on some of these ARK Invest ETFs. They are managing just over $41 billion in assets, but I mean, look at the performance from BlackRock, Vanguard, State Street, Invesco. I just don't see how Cathie Wood and the ARK Invest team is still worth the conversation right now. They got to get it together over there, give us better performance, and we'll jump back on the side of discussing what potential there may be for these ETFs. All right, moving on from that, another great way to utilize ETFs to help you keep a tab on the market is to look at the options overview on the index ETFs, sector ETFs, as well as industry ETFs for the market. Okay, now in this particular case, we see implied volatility lower than the historical implied volatility. The lower the implied volatility, that kind of gives us an indication that there's expected to be less volatility in the market, which is better for investors who want to buy something and benefit long term on a call. Okay, now the 52-week high was set back in October 2020 for the SPY. All right, 35.75%. Right now, this is the S&P 500 we're talking about. So we're very, very far below the high levels of implied volatility we saw back in October, and we just set this low here in May of 2021. Okay, now our put to call ratio in terms of volume and open interest are 1.52 and 1.93 respectively. Now, checking the implied volatility and put to call ratios of the sector ETFs is crucial info. All right, now for this is a key note for the viewers here. For instance, if increased IV in defensive sectors, right, this could mean that there could be an expected rotation in the sectors. Okay, so this is something that we can keep track of. We also want to check that versus the total market, all right, which is the VTI. Now, the implied volatility of the VTI is 12.63, historical 14.22. So historically, the total market is definitely more volatile than the S&P 500. And in this particular case, I think we're seeing the broader market expecting the S&P 500 to get back to its normal of outperforming the total market itself. Now, put to call ratios are much lower for open interest and volume on the VTI. Now, this tells us that the VTI may actually be a bit oversold right now. All right, so measuring the SPY versus the total market is essential. Right, so here we see the total market has a lower put to call yet higher IV, suggesting greater confidence in larger, more stable companies, in my opinion here. All right, let's keep that moving. We did do a chart analysis on the SPY as well. We did notice that the SPY did close out this previous week higher than they closed out the week prior. This could be a signal that we're headed to the upside once again. It will be necessary to get confirmation about this, but our indicators in terms of Elliott waves, stochastic, and Williams is telling us that this is likely to be a solid week for the S&P, which means it's likely to be a solid week for the market. All right, now that's pretty much it for what we're doing with the ETFs. This is our first ever ETF report. I just want to thank everybody that came through and viewed the video. Make sure that you hit the thumbs up button. Make sure that you subscribe. The Stock Market Academy is built to show individual investors the full potential of the stock market. We strive to enhance financial literacy across the globe. However, it is important to note this is not financial advice. This is simply financial information. Please be sure that you do continue to build upon this knowledge and use other resources to enhance your growth.